Welcome to the Foundation for the Study of Cycles. My name is Lars Thienen, and today we run another session of the weekly cycle analysis, your doses of weekly cycle analysis. So once a time, Monday, same time, same place, we meet here. For today, let's have a quick review on what's planned. So first, I will review some main market cycles with you. So we will focus on the SP 500. In addition to that, I will also review the Volatility Index. And third, we will have a quick look on the cycles on Bitcoin. So that's the market update for today on these three main indices. The second topic, which is listed here, is about new features in the cycles application. Yes, we have released something new for you. Which is about a correlation score, which will I show you in a second while I'll go over the market update. And last but not least for today, at the end of the session, I will talk about a new job position here at the foundation. So if you are interested or looking for a new job, so stay tuned. At the end of the session, I will talk about this topic for today. So thanks for staying with me. Just upfront, today is not live, as now business resumes more and more. I'm also now on a lot of business trips, so I will do this recording on Sunday. And you will view it tomorrow. So next week I will be live again. So please enjoy anyhow the session pre-recorded yesterday as you watch it. So thanks for joining Market Cycles first section. Let's get into it. So therefore we go to our cycle analysis application. And as said, let's start with the main markets. So we will first start with the S&P 500. So let's see if any new clues on cycles would be visible. What we see here is the S&P 500. I mean, I talked a lot of times that it's not easy to use cycle analysis on the global S&P 500 because what you see here is just a straight uptrend in the markets for more than a year. So that's always hard for any digital signal processing. If you have this kind of data set and you apply cycle analysis, at least a digital signal processing to this kind of data set, you need to keep this in mind. So therefore, the standard procedure is always the spectrum analysis has been performed while we are looking at this chart here. So the main peak, which is visible here, is given at a cycle length of 169. And as you've watched this channel here, this cycle is the dominant cycle now for years on this data set. However, as we are in a strong uptrend, looking on daily data, we can't trust this cycle very much for the last months here. So that's why we need to be careful using this dominant cycle here. So we can activate it and see it on the chart. And this is now the current forecast here. We could add some additional cycles or even tweak in more data here. So maybe the longer term here, which is 366, so more yearly cycle. And maybe the 116 here, which we could add just looking at the spectrum. So therefore, let me activate these two cycles here. Which gives us this picture here. While I'm coming to the current situation in a second, I will just introduce a new feature while we're talking about the S&P 500 here. So therefore, let's have a closer look here at this chart. So besides the cycle model builder here, you will see now two numbers, which are shown here on the chart. And these two numbers are new. And these are the correlation score between the cycle composite, which is the overlay based on the three cycles we selected here. So these are the three cycles we selected for the composite. And now the left-hand score is the Pearson composite correlation for the in-sample data range. Yeah, so the in-sample data range is also shown down here below. It's the dark blue area, yeah, where you set the anchoring, the starting point and the end point of your cycle analysis. So this is the in-sample period and the Pearson correlation score between the composite and the real data set is shown here on the left. It has a slight color coding, as you know that the Pearson correlation goes from -1 to +1. And if the correlation is above 0.5, it's colored in green. So that it's a positive and good correlation between the composite and the raw data set. If it comes below 0.5, it's just colored in amber here. So you need to be careful, at least from the correlation score. It's not trusted here. So, and this is what you see also in this data sets here. It's a weighted correlation on the detrended data. Yeah, so I will not go into much details here. So, but the raw data is detrended, and then the Pearson correlation is drawn on this data set here. So you see that the in-sample period for these 3 cycles looks good. And now you might ask, what is the second amber score, which is also listed here? This is the correlation score if you, for example, zoom in. So just for the visible range, yeah? So you can zoom in with the mouse here on a specific area, for example, here, and you see that the second score changes while you zoom in and out of this data set, right? So while the in-sample correlation will be fixed because you don't change the anchoring of the analysis, you can zoom in and out with a mouse on special areas of the chart, and this figure will be updated here. So if we have a closer look, so let's browse the data set here. So you can see if we just use these current situation, you see that while the overall in-sample for the selected cycles might look good with this composite, with a Pearson correlation score about above 0.5, if we just zoom in on the last year, you see besides this uptrend here, all the other correlation here is below 0.5. So the recent correlation here, if we take this into account, is not as good as the full in-sample correlation. I mean, this might change. For example, here, if you just zoom into this period, for sure here we have a great correlation again. So this is, you can then zoom into special periods here to check the correlation. For example, here we have a more perfect correlation here, which comes close to 1 for this zoom in. So this gives you quite a nice new feature that you can check just by mathematical numbers, the correlation between the selected cycles, the in-sample period, and then you can drill down, zoom into specific areas to check how the correlation is for the current situation, the past, or special areas you're interested in. So please feel free to just use the correlation to also give you an indication if these cycles, which are based on the spectrum chart, might give you a clue in regards to tops and bottoms and the Pearson correlation of the raw data, which is also an interesting point. So we did it on the S&P 500. We also, so therefore, the Pearson correlation was not as good. So therefore, cycle analysis, but I think it's mainly based on this strong uptrend here. Be careful with these cycles. We need to switch to weekly or even monthly data on the S&P 500. But for today, which always makes sense, is to analyze correlated data sets, which for the S&P is, for example, the Volatility Index or so-called VIX index, which is often also called as a fear index. And therefore, we could use it as a sentiment measure, and therefore measuring cycles and sentiment is always a second interesting point. So let's load up the data for the Volatility Index and see if there are some cycles which might be interesting for us. So we just need to update the data set, which is happening here. So it's running in the background. I think it's Sunday today, so I will take some time here just to update the... So this is the current volatility index, so-called VIX index. Let's see what the spectrum tells us here. We have a similar situation, as you can see here, with the peak at 174. So a similar dominant cycle here in the volatility index as we had in the main S&P index. And maybe then the second one here, 115, 300 something. So let's start with the 174, which gives us this index. I will not go to the correlation score here. In this case, I explained this already to you. So what's interesting here, we are in a slight downtrend, similar to the uptrend in the market if we go to the long-term situation here. So that's the issue with cycles, but at least we see the same dominant cycle. What we have here is this is still pointing to a low in the volatility index for December of this year, which correlate to a major cycle top in the SP 500. So this is where we have both analysis out of phase. So we don't have a synchrony of phases of these cycles, which is also an indication that we have no clear clue from these cycles. We still see the same cycle length, in the volatility and the S&P, but the phases are not in sync. They are out of sync if you compare these two. So we need to keep a closer eye, even on shorter term time frames or higher time frames. Okay, third topic for today. But maybe before we continue, the final reading, if you have a closer look at the S&P 500 and the volatility index, that in depth, and you can review this on your own, both are more or less pointing for a top somewhere in November, December. So for October, for the next month to come, it sounds like we should wait until the period of November, December. Markets should still move up in this point in time, here from the volatility index as seen, and the other from the S&P. And while we continue, we should check the phases and the cycles. Maybe they come into sync until November, December. Then this would be a perfect picture. Until then, there's no clear view other than it seems like the uptrend from the cycles perspective should continue until November, December. Okay? So, third symbol I want to review with you is cryptocurrencies, which are always interesting. I did a lot of work and research on the Bitcoin versus the US dollar. So I want to update the cycles here. If you have followed the last weeks on the Bitcoin update, you've seen that the 200-day cycle is a very important cycle in Bitcoin. And I think 2 weeks ago or 3 weeks ago, please check the video, I showed the update that for the current 200-day cycle, we have achieved the midpoint, I think 3 weeks ago. And the midpoint in dominant cycles is always an interesting point in time where cycles might shift or might change their dominant behavior. We saw Bitcoin since that point more sideways. I mean, there are heavier moves, but at least from the projected uptrend we paused at the mid-trend now, but we have not get into an inversion. So this was 3 weeks ago. So let's see where we are today in this data set here. So Bitcoin and the crypto data set. Here we are. All right, so in regards to the cycles, and now that's interesting here, so therefore please follow the past reviews on Bitcoin here, because it looks like, at least from the current analysis, the 200-day cycle, which normally would be located here at this point, seems to disappear in the current spectrum. So and have been at this midpoint here, so it looks like interesting. So the next cycle, which seems to, at least for the current situation, comes into play, is more the longer one here with 300 days. and maybe then the shorter one here with 150. So we are in a kind of morphing from the major dominant 200-day cycle into these 300 something cycle here. So let's activate them and see what they are telling us. And maybe here you can also follow the correlation score. So in the overall situation, and this is where the detrending is important, the in-sample analysis of this data has already high correlation here. You might see, and that's important, it's a detrended correlation here. Yeah. So if you zoom in, you will see that there is a nice fit for this data set here. If you just have a look at the full data set, you will not see the bounce here because it's a detrended correlation here. Yeah, so this cycle is, from the historical point of view, very nice. And if we just look at the current situation here, you see that this cycle is still valid. And the 200-day cycle is now extending into the 300-day cycle, which is activated here, which has the same reading. Yeah, if you go back 3 weeks ago, we had this 200-day cycle, which exactly projected the bottom here. I think the 200-day cycle was something like this. So it shifted a little bit in regards to length, but it's still the same projection. Yeah, so this was the 200-day cycle. So this is now the 300-day cycle. Both are still pointing up. That's the key message here for Bitcoin. So until the end of the year, at least the major dominant cycle here seems to point up. So this is what I said at the midpoint of the 200-day cycle, which was here. We are now in this sideways a period here for Bitcoin. But at least now this is what happens at this midpoint. We still need to monitor this cycle here, as we are still now at the midpoint of the 300-day cycle. But at least the projection is as shown here on the chart. We can add then the 152, which is also a harmonic relation, just to cross-check here. So if we want to add the next harmonic cycle, which is the cycle with a length of 152, which is shown here in the spectrum, we can add this to get a composite out of 2 cycles, which, and that's then the important reading here, would anyhow not change the projection of the 300-day cycle. It will even shift it more a little bit into the future. So even if we activate both cycles on the composite or just one, both point for continuing dominant upcycle into the end of the year. You see even the Pearson correlation score, which is shown here on top for the full period, is very good. And even if I zoom in here, so this cycle is also in sync with the current market. And that's also maybe then the final message here in the reading. In the S&P and the global market, we didn't have good correlation in the current situation between the dominant cycles. So therefore, for the main markets, the cycles for volatility, S&P have been out of sync. The Pearson correlation score was not as well as to use it for projection. In Bitcoin, it's still different. So that's what you have to keep in mind when doing your cycle analysis. Also keep an eye on, for example, here today we use the Pearson correlation score, which is also shown now directly in the application for you. Okay, that's it for our key agenda for the first section on market cycles, and even on the second topic here. I hope you like the new feature on the shown correlation for the in-sample and the zoom in. So this gives you another confirmation if you should trust the cycles or not. And last but not least for today, talking about a new job position here at the FSC. I mean, this is the story is not the best to tell, but at least we need to fill the gap in regards to our marketing and communication director, which is now open to be filled with someone like you. So if you feel confident to become the new marketing and communication director of the foundation, this is now the time to send us your CV. please send it to me. I will then review and circle this in our bot, and we will currently discuss maybe possible candidates for this new position. So as an marketing and communication director, you will be responsible for all external communication of the foundation, like we do in messaging, in newsletters, via the website, and social channels, like doing here in this video, and to help us as board members to streamline our communication and to reach out to the members in a language which is easy to understand. So if you're interested, please drop me a note. You can always reach me at lars@cycles.org. So don't hesitate, just send me your profile. And I'm happy to take these into account as we are looking for new candidates here. So that's it for today. I hope you liked a little bit the update on current cycles on the markets, the new features you have in the app for your own Pearson correlation score now. And if you're looking for a new position, think about what I've told you. So thanks for staying with me here on Monday. Next week, I try my best to be live here again to also review your current questions and give you some answers next week. Thanks for joining me today. Your weekly dose on cycle analysis. We will see you next week. Please like, subscribe. See you. Bye.